This is Isaiah again. Hope you enjoyed our last video. Hope it was helpful and you learned from it. Remember, as I always say, once you don't understand whatever you see in our content, refer to our mentee and mentors question and answer for you to be cleared. You understand? Myself and the other coaches are there. If you have any question, refer there and they'll put you through. So today, quickly, we're going to talk about not Trendline. Sorry, we're going to talk about market. Change of market trends. The last video was all about the market trend itself. So today we're going to talk about change of market trends. If you remember, I think we practically used this Nasdaq as well. It was higher highs and higher lows and higher lower highs. That is spotting or uptrend and downtrend. And then when the market is stuck between a high and a particular low level, then it is what in a ranging market. You all can remember that. If you can't remember, if you have forgotten, refer back to the market structure video so that you can be able to spot the market structure when you see. So, from our market structure knowledge, we know that this is an uptrend. This is an uptrend. Sorry, my tool is in black and my background is dark as well. Okay, let's put the white. So this is an uptrend, and then what? After the uptrend, immediately we changed to a downtrend, right? So our focal point today is going to be knowing when this thing is about to change, knowing when the market is giving us the information that hello, it's about time for us to leave this trend. It's about time for us to change this trend. Catching the beginning of a trend is one of the profitable action to take in the market. Catching the beginning of a trend and riding it along. So today we're going to focus on what? Knowing the change of a trend. So first of all, we are going to start. We have two type of trend. You all remember the downtrend and the uptrend. You understand? So that the market is creating higher highs. Oh, I didn't quite set this thing before commencing this video. So we are creating what? Let's go back again. So we are creating highs, impulse high, low, higher highs and higher lows. So this is what an uptrend. So the change of a trend is basically when we have something like this. I'm going to explain, all right? So the change of a trend, the change of an uptrend to a downtrend. If you're supposed to have your writing materials with you already. So the change of an uptrend to a downtrend, you understand? You already understand the terms like higher highs, higher lows, the lows, the highs, an impulse, a correction, and all of that. So the change of an uptrend is when the market, breaks below the previous significant low and create a lower high. It's when the market breaks below a previous significant low, which is this significant low. Let's use this, which is this significant low, and create a lower high, which is lower than the previous high. I'm pretty sure that is clear. A change of an uptrend to a downtrend is when the market breaks a previous significant low and create a lower high, failing to break the previous higher high or highest high. You understand? So when the market creates a significant low, when the market breaks the significant low close below it, and then retrace back to give us a high that is lower than the previous high, then we say the market phase has changed from an uptrend to a downtrend. So this is practically this area we'll be looking for the sales. You understand? That is when the market have changed from an uptrend to a downtrend. We are going to demonstrate it. So don't stress yourself a lot, but you have to put it down. Write this. The market is said to have changed from an uptrend to a downtrend when we break a significant low, closes below it, and retrace back to create a lower high, which is lower than the highest high of that uptrend. So then market is tend to be in a downtrend. So what if we're in a downtrend, creating what? Lower lows and lower highs and lower lows and lower highs and all of that, like that. Right? So when is the market changed to an uptrend? You all know that this is a high, another high, another high, there are also highs in between them. I'm just this is a high also. You understand? Lower highs, lower highs, lower highs, lower highs. So the 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 the, the focal point of when the market is about to change the path, a trend is the current what or the last significant lower high. That is the when the market want to change. That is what we use to determine the what determine the change of an uptrend to of a downtrend to an uptrend. So when the market is just an opposite of what happened in the uptrend. So here when the market breaks a significant high, closes closes below it there, closes sorry. When the market breaks above a significant high, closes above it, comes back to create a higher low. That is when the market is said to have changed from a downtrend to an uptrend. When the market breaks a significant high in the downtrend, closes above it, comes back to create a higher low. That is when the market is said to have what changed the trend from a downtrend to an uptrend. So when it creates this higher low, you know that the low is higher than the previous low. And when we get higher lows, is what and when we get higher lows, we know that the trend is changing to an uptrend. So that is the definition of when the market is changing from an uptrend to a downtrend. From an uptrend to a downtrend. So quickly, let's hop into our chart and spot some of that. This is NAS 100 and we're on the daily time frame. I don't want us to stress a lot, that's why I keep us on the daily. So at first the market was what? Uptrend, we had this impulse correction or break, you understand? Up and down, up and down. Then the market got to this level, came back down, right? Came back down, went back a little bit of consolidation. Then we had this impulse. Just a little bit of, the whole of this, I call it an impulse. Then we had this lower high, right? So from there, we had this lower high. Now, if you are going to check it on this time frame, a significant low on this time frame is this low. This is a significant low on this time frame. But when you break to the lower time frames, you know that yes, these lows are relevant, and then that's why when you want to get whenever you want to get a quick entry or a tighter entry or a fast entry and a tighter stop, you go to a lower time frame. The lower time frames are mainly for the entries, you understand, but the higher time frame are for the direction of the market. So the significant low or significant higher low the uptrend is creating is this one. So immediately the market broke below it and closes below it here, it came back up, created a high before launching to the downside. Now if you look at this high, it's lower than this initial higher high. So from here, since the market has started reversing from here, we know that yes, it is time for us to start looking for sales, right? It's time for us to start looking for sales. It's time for us, we now know that the market is what? Trying to create a downtrend right now. The market has confirmed us that yes, it is time for us to go down. Now, like I said, if you dive into the time frames a little more, like if you go down the time frames, you will get quicker entries, quicker change of trends, and all of that. Look at this place. If you were in the lower time frame, this would be like this impulse would have been the change of this impulse. You see, closed below it here, came back up to give us a what? A lower high, and then dropped. You understand? So, like I said, it is the lower high that was created that you look for all your entries. So your entries, you're going to look for entries around this level, and then you see the market came back to it, and then gave entries, and then dropped. You understand? You're going to look for entries at that level. What's wrong? Trying to move the whole box. So you're going to look for entries at that level. Then from there, the market came back and dropped. So immediately the market closed below the previous significant low in an uptrend. If the market closed below a significant low, closes below a significant low, comes back to retest. It comes back to retest, come back to create a lower high, which is lower than the previous significant high. Then the market has changed from what? An uptrend to a downtrend. Now let's look for a change from a downtrend to an uptrend. You can see, right? When you see these things, you can all see them. So let's look for what? A change of trend from a downtrend to an uptrend. So remember, for the downtrend to an uptrend, it has to break a significant high, a significant lower high, and create another higher high, higher than the previous high, then comes back to give us a higher low. Then the trend has changed. Now look at this level. Look at this market. From there, the market came down, gave us a what? A lower high, came back down, and gave us another lower high. Right? Now the market is down here. Now, gives if the market gives us another lower low here and comes back, instead of giving us a lower high around this level, if it breaks above this place, if it breaks there, then practically the market has broken this high, right? So when the market breaks this high, and closes above it and comes back inside again, instead of giving us a lower low, it stops around somewhere here and not forging downward to give us a lower low. Then the market starts reversing. Then we know that yes, the market is what? Changing this trend to an uptrend. So our entries are going to be what? Targeted at this level. Our entries are going to be targeted not at that level. Our entries are going to be targeted at this level. You understand? The place it came back to retest. You understand? So it's just simple, guys. I just want you guys to get the whole thing. You understand?
It's 6 o'clock.
Thank you, Siri. I just want you guys to get the whole thing, not the way we were taught that the trend changes. When you are doing retail trading, we were taught that when the market breaks a trend line, then that's it. We were taught that when the market breaks a trend line, then the market has changed a trend, and then you look for a retest and what. I haven't taught you guys how to use trend line, but that is definitely what I'm going to teach you guys immediately after this video, after this trend talk, and then why they fail in the retail trading. I want to show you guys that when the market breaks the trend line, it doesn't really count to be the break of a trend. It doesn't. Now look at this. Like those people that trade the retail trading, okay, they'll be no, they won't. They won't be lucky in this trade. You see that? This way they will target them, because they say when they break off a trend line, you wait for a retest closer to the trend line, a retest on the turning point, or in the turning point, or a support and stand level closer to the trend line. So they will be waiting for this place, for the market to come back here. Then they have something like this. Those trading the retail way. If you're not trading the highest money concept, you're trading the retail way or the smart money concept. Those trading the retail way will look for entries around here, because this is what this has been the support and resistance level. So it broke through the resistance level. How to make it a support here to drop. But you see, they were not tagging to the trade. But you know that if I'm going to show you guys how to get this kind of entries, how to get the entry we trade here, or the entries you guys see on the signal groups, how we get them. I'm going to teach you guys how to get all of that. But we know we roll from bottom to top, right? So I'm Hexader. Remember, the road that drives you through the vehicle that drives you through the road to success is your own hard work. Go back to your chart and practice. Look at the chart itself and try to identify change of an uptrend to a downtrend and a downtrend to an uptrend. Thanks for watching.